Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
It's Jack Devine with 32 years with the Central Intelligence Agency. He's written about it more on an international perspective and joins us this morning. Jack, honored that you're with us. You have a global CIA perspective. Does the FBI have the same acuity looking for the bad guys of terror in America that you had abroad?
I think that's a great question. I don't know if anyone knows the answer, but the FBI is really very strong at home. I mean, their ability to penetrate groups and collect information, use their powers and authority. When they leave the United States, then they're just like anyone else. It's very hard to do things in an overt way. So I think we're much stronger in our ability to have sources everywhere. And I think things have improved very much between the FBI and the CIA. So it's not as if it's all compartmented.
My book of the year, at least a decade ago, Garrett Graff, we're efforting Mr. Graff for this conversation on the FBI. Jack Devine, does the CIA and the FBI, do they coalesce information daily to try to find bad guys like the guy in New Orleans?
I think it goes 24/7, all right? Now, the problem in this case is they didn't even have criminal records, right? So you don't know. I mean, it's it's an ocean full of fish, if you will. So, but their abilities and the speed with which we cover information and, AI in general is mind-blowing when you start to look at it. So the capabilities are rich, but it's the proverbial needle in the haystack, right? So all those that are sort of institutionalized, really organized by ISIS, they probably have a really good fix on that. But when you get to those that are inspired, hell, it could be anybody on a mountaintop who gets inspired, and it's really hard. But I think we're really in a much stronger position than we were, say, at the time of 9/11. No comparison.
Hey, Jack, President-elect Trump will be sworn in January 20th. Presumably shortly thereafter, he'll receive his first CIA briefing. What do you think the CIA is going to present to him in terms of priorities?
Well, he's been in the office before, right? So he knows the drill. He knows the capabilities. You don't have to sit down and say, let me explain that this is the presidential's daily brief. This is how it's collected. So I think first day he'll walk in the room. Actually, the president will be briefed substantially before he's sworn in. And it'll be closing gaps and filling in the new information. But, it's not like being president. Next thing you know, you turn around, you have a terrorist incident, and they almost are always required instantaneous information, new information. So my guess is they'll be bringing him the latest news that was on and major issues around the world that happened the night before. So you're right up to speed to the moment. It'll probably be a long session and probably include more than one briefer.
Jack Devine, 3 days of a condor is what we were weaned on. Sidney Pollack, the giant. What an honor to make his acquaintance. 3 days of a condor was what we were weaned on. And there's all the modern CIA movies, starting with a lot of techno whiz-bang. What do you think when you watch the modern CIA movies? What does Jack Devine think of those movies?
Well, I once had a conversation with Sean Connery about it, right? I made a mistake, though. I mentioned the Queen, and he told me immediately why. I'm a monarchist. But beside that, we talked about it, and I said, for years I diminished the importance of the movies, and then I realized everybody's thought the CIA people were omnipotent, were dashing and handsome, and that's not the case, Tom. But my point is, one of the things that I think are really interesting is many of the movies are a few years ahead, like the one Jason Bourne. And in Bourne, the technology was there, but it wasn't integrated, right? But when it was revisited, Jason Bourne, the material had been integrated. So there's a lot to learn from the technology. They bring in a lot of advisors. So television, it depends on the type and the quality of the program. The good ones really, particularly on technology, are good. It's the romantic part, and it's the CIA is bumping off people without all that junk, Hollywood junk. But if you look at the just core pieces of how things are done, it's pretty close.
Jack Devine, don't be a stranger. Thank you so much. Thank you for your public service.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Esteemed and waiting
Yeah.
with his cello or viola or bass violin at Duke is a perfect. He gave you a quality C you snuck out with?
I got a solid P there, and I am very proud of that back in the day. 20 P's equals 60 G's is what we said back in the day. Campbell Harvey joins us, professor of finance at the Fuqua School of Business at Duke University. Professor, I'm looking at your yield curve. I think it's uninverted, as I remember you teach me back in the day. So we've got a steepening yield curve. What does that tell me?
Finally, after 25 months, the yield curve, which is defined as the 10-year yield minus the 3-month Treasury bill yield, that is normalized, meaning that the short rate is lower than the long rate. So it's been a long time. And it's kind of interesting to me that if you look at the last 4 recessions, that the yield curve uninverted before the recession actually began. And the average lead time is about 5 months. So that's kind of the situation. Many people thought, oh, well, the yield curve's inverted, but we don't have a recession. But if you look at the data, the recession happens after the yield curve uninverts.
So if that's in fact the case, how do you think the Fed will proceed in 2025? I mean, boy, 6 months ago, the market was discounting, 4 or 5 rate cuts this year. Now I kind of feel like it's maybe just a couple. What do you think the Fed's going to do in 25?
So if you look at their forecasts, it's well known that they've kind of revised the number of cuts. And I think that this is very dangerous for the economy. So the rate should not be where it is, given the inflation that we're experiencing right now. So they need to do multiple cuts this year. And really what's factored in is like 2, and it should be more like 5, in my opinion. Yeah. We should be at 3.5%. There's no reason not to be at 3.5%. And when you keep the rate so high for so long, you are like really gambling with the economy, because we know that high rates are bad for economic growth.
Cam Harvey, I am having a great joy of reading Ned Phelps' new book out of Columbia. It's not an autobiography, but it's a walk through all of the experiences of the Nobel laureate's life. And I thought of you, because he leads in the intro with his more modern concept of a flourishing America where our intellectual effort feeds on itself into a greater productivity. Is that what we have going on in the United States now? A flourishing America, at least for some?
I don't think so. Indeed, we put ourselves in a really awkward position, to say the least, with $35 trillion of debt, with the interest payments on the debt near $1.2 trillion a year, and a structural deficit where the deficit is $2 trillion a year at a time where the stock market's at a record high, unemployment is low, and it doesn't make any sense. So we've handcuffed ourselves for the future. We will not have that flexibility. And we need to deal with the structural deficit and the debt. And tough choices will have to be made. Right. So this is a time of great risk. And the Fed is definitely not helping us, because holding the rate so high is holding back economic growth. And we need that economic growth to increase tax revenues, to decrease that deficit at least somewhat. There's tough choices that need to be made, but we need to deal with it.
Too short a visit. We'll have to do this again. What do we have to do? Was there a big Duke basketball game coming up? Like
football.
Football?
They're in a bowl game, dude. So
Duke is in a bowl game?
Against Ole Miss tomorrow.
They just write the check out to Cam Harvey, don't
exactly,
they? Okay.
Right.
Professor Harvey, thank you so much at Fuqua, Duke University.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Joining us now, Sarah Hunt with us with Alpine Saxon Woods. I want you to talk about how people feel. SPX up 23-24%. Some of the Mag 7 mutual funds up 35%, whatever. And people doing 60-40, I don't know where they were. Somebody told me another lousy year for bonds. I don't know. What total return is the break point where I feel good this year? 15%?
That's a great question. I would say that's high. I would say that.
Really?
I would say that's high. Well, I mean, feel great. So you've had 2 years of really good returns, right? So the concern for me would be, or in general would be, well, we just don't want to have something that goes negative. We don't want to take those returns away. But I think if you got somewhere around 8, 9, something that was higher than what people think of as the average, and yet not nearly as punchy as we've had for the last couple of years, I think people would feel pretty okay about that. I think the concern is after back-to-back, it's tough.
I mean, Paul, jump in here. I mean, I looked at one statistic, and I'm catching up, folks, mon Dieu. I looked at one statistic where 400x gazillion walked out of large cap equity funds when I got on a plane to France.
I know.
Like a lot of money walked away from blue chip America, Paul.
Yeah, and I think there's a run up right after the election, and a little of that maybe peeled off right there in the last couple of weeks of trading here. But I mean, if we're going to have high single digit returns, I know I'm looking at the street that's got double digit earnings growth, so it's really implying a compression of the multiple out there. Is that something that you think is reasonable or should happen?
I think that if the compression of the multiple comes, it's going to come because the E is moving up and not because the multiple's coming down, but there's some natural compression on the other side there. And I think part of that is you've got to grow into some of these expectations, right? Because that's where I'm thinking that it's hard to look at double-digit returns, and it's good to think that you could get high single-digit returns and maybe even move into that. The flip side would be if you get enough things to be worried about that things start to look much scarier than they do right now. So that's kind of where we're thinking.
And the market seems to be discounting, I guess, just 2 interest rate cuts this year. Can the market move higher with that type of interest rate environment, or do we need more? Like Cam Harvey from Duke University was just on saying he thinks should be 5 cuts.
And saying it enthusiastically.
Right.
But I would say that the good news is we've pared it down to that expectation, and that then if it goes up again, that will help. You've seen those expectations move around so quickly that it's difficult to say, what the market expects is what we're going to get, because we haven't every single time it's changed. So I think that the fact that we're down to a lower number of cuts is actually better than if we were still sitting here at 5 or 6.
There's a return of the fancy stocks, and everything else, I guess 3-year track record was basically flat. I don't have the numbers in front of me. Should those managements change to worship free cash flow like the successful stocks? Are you observing managements grinding it out at Alpine Saxon Woods day after day? Are you seeing a change to a new worship for the free cash flow of Apple or the others?
I think that management started looking at that as soon as you started to see interest rates get up off that zero bound. Whether or not they can actually pull that through has become the question. So really one of the things that we look at very carefully is, are you managing to have positive free cash flow? Because in an environment where rates are not coming down as fast as Cam Harvey would like them to do, then you also have to look at what can happen going forward, and I need to see that cash. And if you haven't been able to do it by now into this point, I think that it's much more problematic to be looking at those balance sheets.
People seem pretty optimistic about President-elect Trump and what he means for the economy, what he means for markets, whether it's for lower taxes, maybe some deregulation, easier on the M&A front. Does that suggest we can then move away from these big tech names and think about more cyclical areas of the economy? Is that a theme for 25?
I think we're going to stick with some of the themes that have already occurred. So if you think about thematic investing, right, you think about what happened with utility space, with some of the industrials, everything that's moving into this area where technology is going to need more resources, that I think can continue. And I think the question really becomes what happens to the rest of the economy. And I think that's what people are really looking for, that broadening out that we've been talking about for 2 or 3 years. We're going to get the broadening out, and then the Russell gets slammed in the last month of December. I think that people are looking for that mid-cap that catch up. And that's where, again, those balance sheets become very important, because those are companies that can't afford to be continuously borrowing money.
I don't leave a name out of it. I got a venerable large cap trading at a 21 multiple. They're popping a 2.2% dividend with 3% dividend growth. None of this rings Mag 7 at all. They got nice weighted average cost of capital, nice ROIC, but they're not in that glory group. How do they get to that glory group? PR or executive statements? How do the losers become the winners of Mag 7?
Well, the most interesting thing that you said about that is they're sitting there with a 20 multiple. That would have been a high multiple in other years, right? The fact that our multiple expectations have moved up so much on the industrial space, in other spaces, I think the way that rest of that catches up is that the rest of the market continues to stay higher, and people start looking for things that look relatively less expensive. And I think this year you're going to see a lot of people, it's not so much about looking for the value stocks versus growth, but where can I get growth that doesn't look unreasonably priced? And that's going to be, I think, a thing for 2025.
30 seconds, share buyback. I mean, there's just got to be a new formula for really well-run companies with lousy multiples to join the haves of the stock market.
And raising those dividends and buying back those shares is a big way to
Paul's
do it.
big on. It's raising the
It's
dividend.
capital return. We do that.
We got to get the guy from, I think it's new, I can't remember, Federated.
Yeah.
I don't have it in front of me, folks. He's got a book out. It's the Sweeney Bible. Shut up and raise a dividend.
Yeah, I say that to Tim Cook every time I see him down in Duke, and he just ignores me. He says, I got better seats.
He just wants you to write a bigger check.
Yeah.
I mean, that's what he's
Yeah, exactly.
He and Rubenstein are tag teaming you.
Yeah, exactly.
Yeah.
No,
Sarah, thank you so much for coming in today.
Thank you. Great to be
Everybody
here.
else is like, home.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
And we say good morning from the Major Publications Division. It is the Lisa Mateo Hour. She survived New Year's Eve and joins us this morning.
All right, I have our top story. French President Emmanuel Macron made his New Year's speech. I'm going to shake it up right now. I want to go to Paris correspondent Tom Keene and see how everything was in
He called
Paris.
Mrs. Keene at CDG and said about half of the French people, thank you. It's the oddest economy. There's a group, a couple called Les Frenchies, who do videos on YouTube about where to go eat so you're not a tourist. So we went one arrondissement outside of what's basically America in the middle of Paris, near the old Bastille.
Okay.
Bastille Day and all that, to a wonderful restaurant called Beaufranger, which is like the real Paris. And it's totally different than what you experience in the nexus of America East in the middle of Paris.
So how are the consumers feeling there? Because
I think the French people are flat on their back. Witness the politics of Mr. Macron.
Yep.
The observation is the consumption of their tourist trade is unbelievable. I saw one statistic, I don't have it in front of me. On the margin, 85% of new jobs in France in the last 5 years have been tourist-based.
wow.
Okay.
So there's this Disneyland of America, around Notre Dame and all that, out to the Eiffel Tower and all that. But then the moment you get outside that, it's the France that Macron has to deal with.
So it's like going down to the village or going,
Okay.
going up to uptown versus just hanging in
Can I
Times
do a
Square.
shout out?
Yeah.
Yes.
Air France just killed it.
Oh,
Just
okay,
killed
good for
it.
them.
They're real competition for the domestic carriers. We'll have to see.
And
Next, what do you got?
How is your French? Très bien?
Mon français, c'est terrible. With the Uber driver, I said, où est la bibliothèque? And he took us to the library at work. What do you got?
Okay. A Rolex, if you have any plans to buy one,
No.
it's going to cost you more. So I just wanted to let you know they raised prices, some of its most popular models. Gold value surged in 2024, so they kicked off the new year. They hiked prices about 8% on some models. It's not new. I mean, Rolex usually raises prices once a year on January 1st, but this increase is larger than last year's. So it's going to cost you a little more. How
so
much?
tough to get, though.
I know. So here's an example. So you have the yellow gold day date with a 40 millimeter black dial.
Okay.
It'll cost just over $45,000. Okay, and that is up from $42,000 from from the year before. That's according to their website.
Yeah,
but
I don't
it's
know.
a pretty penny.
You know, when I was in the market for that type of watch years and years ago, I really did look at the Rolex, but the value proposition just was not
So you
there
never
for
got
me.
it. You never
so
had
I
a
got
Rolex.
an Omega, and for me, that value proposition felt better. So, but
Yeah,
I
that's
looked
what
long and
cash
hard.
flow wants.
I looked long and hard.
Cash flow. Cash flow's my oldest son. Cash flow wants an Omega like astronaut watch.
Yeah.
I looked at the price. I said, "You're kidding me."
They're half the Rolex, though, and I kind
Yeah.
of feel like
okay.
I'm getting more value. That's kind of what I felt.
So
I
your
don't know.
basic take is you walk out of the store with a Rolex and it goes down right away.
No. In fact, they hold the
hold
values
value.
of Rolexes
okay.
and other premium watches, including Omega. I mean, we have on the Bloomberg terminal a watch index.
Can you see me in a Yachtmaster titanium?
Sure.
I don't think so.
Absolutely.
Next.
In Paris.
This one is in the Wall Street Journal. This is actually interesting. So a real estate developer in Los Angeles testing out this new blueprint for affordable housing. They're stacking apartments on top of a Costco. Okay, so bear with me here. Okay, it's Thrive Living. They want to begin construction early 2025, 800 units, affordable housing complex in South Los Angeles. Rooftop pool, fitness center, 184 apartments.
That's okay. That's
But
good.
so
Free
here's,
hot dogs?
No, you don't get the free hot dogs. But here's why they're saying it's going to work, because the rent that Costco pays Thrive will help the developer rely less on government subsidies for the affordable housing. And then Costco stands to gain more customers. So they're saying it's a win-win for everyone. Okay. But it started this shift because the big box retailers are usually in suburban areas, right? Where you have the room. You can have the big parking lot, the big warehouse. But now they're doing a little smaller stores, not as big, like Target, Whole Foods. They do it. They have the apartments.
Target
sometimes
has a
on top.
store on 86th Street, and it's not that big, right?
Right. They're
Yeah.
smaller, more compact, but it works for the city. So they're trying to get these big box retailers more into the city. Because I remember David Guru was saying, where
Yes.
you got to go for the Costco.
Well, he's in hip of Brooklyn.
He's in the hip of Brooklyn.
Yeah, he's.
But it's a new thought to put affordable housing on top of these.
Gotta
big
get
box
creative.
retailers.
Gotta get
Spends,
creative.
Gura
Yeah.
spends $40 for a pizza.
Exactly.
Like, please.
Yeah.
Takes the kids out and it's got whole wheat from, I don't know, Kazakhstan or something. Next, what do you got?
Last one. Not sure what you're watching on TV, what you've
Not
been
this
watching
one.
streaming. Okay, but season 2 of Netflix's survival series, Squid Game. Yes. Topped the charts globally, despite having some mixed reviews. Some people liked it, some people didn't. 68 million views since it debuted December 26. It's also the biggest debut ever for a Netflix original show. It's a big moneymaker for them. I mean, the first season generated $900 million in value for Netflix after it debuted in 2021.
Yeah.
And season 3, if you wanted it or not, it is coming, and it's going to be next year. I have not been
come
into
on.
the Squid Games. I don't know.
Joe Uri's killing it as Kim Jin-hee. I mean,
Yeah.
her low-life boyfriend lost money in crypto or something, so she's been sucked into the Squid Games. It's tragic.
Oh, gosh.
I mean, she looks like one of the K-pop girls, too. So, it works.
It's a bit gruesome, but
Have you watched?
I have not watched it. My husband was watching Silo last night on
Love it.
Apple
Love
TV.
Silo.
Yes,
Love
he was
Silo.
watching it. He has a month to do it because it cancels.
Oh,
This
'cause you're not
it was
paying
only a
for it.
3-month free trial, so that's going to
No,
cancel.
but
I heard
You're going to
that was
forget about it,
addicted
and
to
then it's going
Silo.
to start hitting your credit card.
I know.
It's beautifully shot, and Tim Cook went out and did a thing with the lead actress,
Yeah.
Rebecca Ferguson, I believe. He's such a fan of the show, and you wonder how much Cook is driving what is on Apple TV. Basic idea, though, is nobody watches Apple TV, right?
They don't have too much. I feel like they don't have too much. That's why I never got
Yeah.
it. I just got the free trial because I feel like there's not much to offer on it. But apparently this show
I'm
really
going to tear
good.
up. Your first newspapers for 2020.
Exactly.
It was strong.
First of many, very
She
good.
started strong. Lisa Mateo, thank you so much for the newspapers.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.